What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 16th of 2022. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, I want to spend some time to dive into why I believe at this moment we're seeing signs of technical price action in the data science models and on on-chain analytics that's signaling that Bitcoin could be in for a major rally going into the next week or so. And I really believe that the correction or the slight pullback we've had really over the past couple of days, if you can even call it that, is just nothing more than that. A slight pullback that is setting up a higher level of support to rally higher. We're going to be diving into all that and more as we go throughout the video. Let's go ahead and kick it off, guys. So to start off here, I want to focus on technical price action. This is one of the areas that we've gotten pretty right over the past month and a half, 2 months, since we were calling for the correction to continue back here in December. Now, as we came down here to the the $35 to $30,000 range with a low here around $33,000, meeting there in the middle, we've been able to see a nice retrace back upwards in price with higher lows and higher highs. And what's really nice to see here is, and as you guys can see with the green line here, which I haven't really touched, just left it there since we've been calling for some rebound around this time in January, February. All the while, the time frame is a little bit delayed in this case, so prices are starting to surge higher here. What we really got is something we were looking for, which is a retest of this support range here, around the $40K to $42,000 range. This was a range of previous support back here, and it served as previous resistance back multiple times back throughout May and July when we had the previous correction. And this is really significant. The reason why it's significant that as we got this cool down, which we were talking about the other day, that as much as we've had some great days here in the sense of price, we needed some kind of fade or pullback here, something needed to give so we could set in that higher low. Seeing it here on this level and seeing the rebound in price here, nearly 5% over yesterday's 24-hour candle, we can see that the market is signaling that it's not waiting around. It is not waiting for it to come down and consolidate multiple times like it did back here during May and July. Now, I want to emphasize this point here, what this is telling when it comes to price. Because all the while there are a lot of great indicators out there, and yes, a lot of different models we'll take a look at. The key thing is, what is the market telling us? Is there buyers who are willing to buy in at higher lows than in the past? And at what rate are they paying a premium, right? Is it that they're, for example, waiting for it to consolidate for a little while and then they buy at a higher level? And how significantly higher in this case is it from the previous low, right? To see since back here in January, since the discount, revisiting this range, that we aren't getting any close retest down here to 30,000 or 25,000, as a lot of people were kind of taking a perspective on, we're seeing instead that buyers are coming in at higher premiums. And they're buying up the dips quite quickly. Now, what I think is really incredible about all of this is that we've not only got the setup to really start charting higher here. So imagine, if you guys will, for a moment, that this green line really is representing what we're seeing here, right? We've had the retest of this support range. Now we can start to charter higher. It might mean that over the next coming weeks, we could really be back into territory, just like we did over here, right? We could be back into territory of where we're revisiting back towards this previous resistance range, the previous all-time highs. I would bet more confidently, just to set expectations, that this is something we're probably going to see in April, right? And it's only a month and a half away from where we are right now, give or take maybe possibly 2 months. And then we could be revisiting back up to this range and have a chance to, again, get back above this resistance range. Don't know if we're going to have any significant pullback or correction. We might get a third kind of a fake out here where it doesn't go all the way down and we start to charter back above. But anyways, the major thing is that once we clear through this range, it looks like the third time might be the charm for us to continue surging higher. Now, again, that's starting to get towards a range where no one, even including myself, will know exactly how price is going to play out. These, again, are just kind of mere projections we're going off of. But I try to keep my drawings here so you guys can see, generally speaking, the major framework of what we look for in price. It's not about exactly hitting the certain dates or anything like that, but focusing on the kind of price levels that we would expect to see or the ranges we expect to see tested in order to continue going forward into a bull market or into a bear market. We're not closed off to that. But again, I really don't think there's much signaling here within price. If we were setting up for a bear market, this low would have likely been, or the low in this case where we'd see some kind of rebound or dead cat bounce, would have been at a lower range in price. But instead, people are buying at premiums and they're not waiting for this kind of very on edge sideways consolidation where they're absolutely only buying it at around $29,000, $30,000. No, they're buying in and they're driving the spot price up. If you look at the market order flow, it's clear when it comes to the market. Now, I want to go ahead here and take a look. Another long-term perspective. This is similar to the chart we talked about in one of our videos we put out back a couple days ago. I think it was last week, where we talked about where we saw Bitcoin going in 2022 and what really is the first major thing that we need to focus on here over the next preceding months. The first thing we need to understand here is that we've been making consistently, although it may not feel like it, consistently higher lows here in regards to price, right? We've been trending higher here, not only in the lows, but also in the highs. We set in a slightly higher high here back than what we set here in April, right? I think the total was, $69,000. Nice even level. And of course, there's room for memes with that number. But outside of that, back in April, we had around 64,854, right? So 4K premium generally on top of the previous highs. And again, same with the lows here, buyers coming in. And on top of that, coming in faster than how they did back here. There wasn't as long of a consolidation period, right? So why is this range significant? Why did buyers come in here? Well, it's likely to do with the fact that people are focusing on the ascending trend line between the 2017 high in December and the previous ranges of support here in the past, right? Where we had, for example, Tesla coming in, driving Bitcoin's price from 30K to 63K. And along with that as well, the May to July lows, which had multiple retests and signified that range of support, right? So this generally means that the market should generally expect that buyers are going to be prepared here. What many people weren't prepared for or didn't consider is that there's probably buyers considering that those buyers are going to come in at that range and continuously keep up price, right? Because they think that 30K is a good range. So some other bulls in the market who aren't waiting around, the smart money in this case, decided to just go in and start buying in this case. And they're doing it a lot quicker than the last time. Now, what we need to see here, roughly speaking, right? Again, this is just a rough trend line here, is again, a retest here, a third higher high in price, higher than the two previous ones in the past. And eventually, even though we might have some kind of pullback that'll scare people, right? I don't think it's going to be anywhere significantly close to what we've seen here in the past because, again, the trend is getting stronger. The saying goes that usually the third time is the charm and that prices are going to start to move higher here, getting back above this previous resistance range, setting a new all-time highs, and potentially making that range support and having one final spring up rally going in to near the close of the year, sometime in November. That's our target. We've been talking about Bitcoin reaching 150K, 200K in that time frame. And that's the kind of setup you could use, really this long consolidation period, getting above it, not only clearing through that resistance, but also turning it into support, right? If you had something like this kind of price action here, get my drawing tool so I can just kind of highlight it here. If you have this kind of price action up here, the sky is the limit. Bitcoin can soar up higher. The mania rally can really kick in because at that point, obviously retail is probably more interested in Bitcoin with the heightened price, but outside of that, institutions will love that setup. That is technical strength. Right when people are thinking maybe we get to 80 to 100K, people are like, oh, that's the top, and people start, even smart money might start taking profits, right? But then another wave of buyers buys it at that range. And it's like, oh my gosh, the show's not over. Get back in. And then you have this surge of people coming in. You have the shorts getting liquidated. You have prices getting back to that parabolic euphoric state that you tend to find at the peak of markets because people can't believe that there's still room to grow. And they play a role in driving that last euphoria stage. Whereas us as investors, waiting patiently, we're going to wait for that mania period. And as that mania period starts to encroach on us, when we start seeing all the headlines flowing, we're going to day by day probably start taking some profits. Now, maybe you're a long-term holder. That's totally fine. For me, guys, as much as I love crypto, I'm a long-term swing trader. That's when I'm probably going to start to take profits, just like we did back in 2017 and 2018 from the altcoin market, right? So again, just want to emphasize that there, right? This is the kind of setup we should expect here, I think. And it's a beautiful technical setup. And it's very much in line with these long-term consolidation periods with rallies in between, right? I'll draw that one more time, right? We can see here there are significant waves of upward price action, long-term consolidation periods, significant waves of upward price action, consolidation. You get the drift. I'm rambling on at this point. So now that we've done that, I want to go ahead and take a look here at some of the data science models or different sentiment indicators we can look at. I know the fear and greed index in this case may seem like a very simple index, but one thing that I think is very valuable about it is its consistency over time. I understand some people are like, oh, okay, so it's in the red, doesn't mean it's a time to buy. Wholeheartedly agree with that, right? As we talked about on the channel, the fear and greed index showcases here that we're starting to enter into various phases here, that all the while something might be getting fearful or greedy doesn't mean that we immediately take profit or buy into the market, but it's just to showcase that we're edging in. And I think of it kind of, if you will, think about it in the sense of like opposing bell curves, right? So you've got basically, right, where you have the peak here and you have the curve down and you have the trough, right? We're starting to enter into either a fearful period of time where we should start getting more comfortable adding into our positions. And on the other end, if we're entering into the greedy phase, look, it's not an immediate reason to take profit, but we should probably start to look at taking some of our chips off the table, right? Simple way to go about doing it, right? When the going gets good, it's best not to believe that it's just going to constantly be going good, right? There's eventually going to be an end to the music will stop, and of course, prices will start to correct and it won't be fun. But I wanted to go ahead and focus on the fact here that when we get towards a fear score of anywhere from around 11 to 15 points, like we saw back here, and we start to charter into yellow territory, where we bounce up, have a serious bounce up here in the fear and index towards neutral territory, we very rarely find that this isn't a sign of a rebound up to the market. And what I mean by that is just take a look here, for example, where we were back here, right? We had a retest here of 13 and 10 here, getting towards that really low period, multiple retests of that range. And when we got into the yellow territory here, we really didn't revisit back down to that ultimate fearful period, not to mention what's more important is really the price at that point continued to set in higher lows and higher highs. The trend was back in favor of the bulls, right? And then of course that changed here, right? When we started to get into those fearful numbers back down in the low single digit range below 15 points, right? We needed to wait until we saw those yellow figures, right? As we can see here, we're back up to the 50-point score where prices are moving higher. Same exact thing over here back in March of 2020, right? Fearful period of time. We went all the way down to 8, 9, 10, and 11. Serious sell side days where practically everyone thought crypto markets were dead. And again, after we escaped that period and got into the yellow period, right? Didn't see any more corrections. Okay. So my major point here that I do want to drive here is that the market right now in most models is signaling that Bitcoin is not only at a dramatic fundamental discount, but the sentiment has started to shift here. We're in neutral territory. We're not in euphoric periods of time, but at the same time, there is all the while there's definitely some people who are optimistic on the market. There's still a good balanced amount who are still concerned about the state of the market. And that's just typical, right? People who are revenge trading, who are ultimately bullish here at the top and now are bearish and trying to short the market at the bottom. They're getting caught 2 steps behind. They're leverage trading. They're making the same repeated mistakes that unfortunately we can try to warn ourselves as much about, but there are some people who just either aren't hearing it or aren't listening, right? So again, hopefully we at least do the good thing, which is not sharing it around. One thing I do want to share with you guys real quick that I think is really interesting is this post here from Crypto5Max that I found on Twitter. And I think this encapsulates something out of all the models out there. One of them that I really like is focusing on the OnChain Analytics for short-term holders to long-term holders. It's a ratio here between those who are holding Bitcoin for short periods of time and those who are holding it for long periods of time. And when we get this ratio down here within this green range, which is what we saw here at the start of the new year, and we not only see that, but we see a divergence in price, right? We see that there's a decline, an even lower level here, right? From the short-term period, a few preceding months ahead, or about a quarter ahead. We can see that there's an interesting play out here over history. We see higher lows, so in this case, higher lows in price, but we see lower lows here before we really kick off the next wave when it comes to the short and long-term holder ratio. We've seen that 2 times here. Want to know what times those were? During the consolidation period here at the end of the 2013 bear market going into 2015. And outside of that, we saw it here during the March correction. Interesting stuff. it's sad, but it's the truth that we have to look at, are more people in this case, are we seeing more long-term holders, are we seeing more short-term holders in the market? And it tends to be that the short-term minded individuals out there, when they have been flushed out of the market, when there has been max pain, when they have given up on things because they thought the going would be good forever, well, when they're out of the market, that's usually a time to get optimistic. And price action shows that historically through higher lows. To those who are thinking that we're going to be seeing a correction to 25, 30K, right? I was there with you guys in the sense of it going to 35 to 30K, but we already got that test. And I don't see it coming anytime soon. It's not that price is going to absolutely surge up here overnight, but to be honest with you all, the price action signaling one thing, that buyers aren't waiting. They're not waiting for it to go down there. Because right now, we can clearly see for multiple weeks that we've seen higher lows and higher highs in the shorter term time frame. Buyers are pushing up prices until there is enough sell side pressure to mitigate that extra buy side pressure that's driving up prices, and is willing to clear through the bids on the order book to drive prices down that much. It's not going to happen, right? So again, just want to emphasize that it's not completely off the table, but unless there's that kind of major sell side catalyst, right? Maybe, for example, the recompensation of Bitfinex users, or Mt. Gox or Magic the Gathering online exchange holders, right? All those Bitcoin that are maybe being returned possibly might be the sell side event. Who knows, right? Now, the last thing I want to take a look here, again, it's signaling to this point about the short-term holders on chain, is taking a look at a kind of an interesting perspective from the HODL Waves data science model, which is something that we've talked about a lot here on the channel. What's really interesting about the HODL Waves is that, especially here on lookintobitcoin.com, you can start to highlight various different portions here of timeframes. And what I generally like to do is look at the 6-month time frame and lower when I'm thinking about short-term holders, right? These are your kind of short-term swing traders. These are people who, again, are looking to get into the market, double their money maybe in the next couple of months, or triple their money, right? Whatever. And I think what's really fascinating about this is that we are at our lowest level here of combined percentages for these values, not only lower than where we were right here before the spring up event from 10K to 65K in price, but outside of that as well, here as we started to enter into the last phase here of the bear market in November 2018, and it's lower than even the majority of this consolidation period that we saw back here in 2015. All right. So what is this telling of here? It tells us that the vast majority of Bitcoin has not moved in the last 6 months. The short-term holders as a percentage of on-chain activity are really a small minority. Most is dedicated to the long-term holders. And that likely means because most Bitcoin, or the growing number of Bitcoin, are not moving on-chain in the short term, that there's going to be a growing supply shortage. It's not an absolute guarantee, but again, on-chain we can see, roughly speaking, that there's less Bitcoin circulating around. Long-term holders are holding their Bitcoin, right? And again, this is one of many catalysts here that play into markets moving higher, because markets are merely supply and demand. It's about market order flow, right? People market buying or market selling into the best available limit order on the market through the bids and the asks. And then the second one is how much order flow is causing resistance for the bids and the asks on the order book. Those are the only two things that really determine markets. You can throw a headline at something, you can have the best indicator in the world about what the market's going to do. That's what really matters at the end of the day. And myself, including anyone else out there in the world, can't tell you otherwise. That's just how markets work. That's how price is determined, right? So anyways, I don't want to ramble on too much, guys, but I do want to dive into today's sponsor real quick. We've got a news mention, and then later on I'm going to dive into a really important point that I think is, again, another indicator we should follow when it comes to determining whether or not Bitcoin is really going to continue charging higher. But I want to go ahead and spend some time to talk about Waves Exchange. So as you guys probably know, the Waves protocol is one of the alternative layer 1 protocols. They're today's sponsor for the channel. And Waves is mainly focused on building a much more high throughput blockchain. It has a lot of the same capabilities that you guys have come to know and love on Ethereum and other networks. And what's really cool about Waves Exchange specifically is that it's the equivalent of an AMM for the Waves protocol. But I want to spend some time today to talk about some of the programs they have for providing liquidity on the protocol. Now, if you guys are familiar with DeFi and you happen to be someone who likes to provide liquidity, the yield generation opportunities here are pretty nice. But again, this is something that may not be for everyone. I just want to preface that. I definitely recommend, if you guys haven't already, to learn first about the Waves protocol, dive into what the Waves Exchange is as a protocol, and if you're interested, continue watching and we'll talk a little bit about some of the different yield generating opportunities. So just like with traditional AMMs, there's opportunities here to provide liquidity to the protocol. In an AMM, you're going to need people who can provide, as liquidity providers, two different types of tokens into a liquidity pool. So people can trade from one token to another. And this gives the opportunity to be able to get forms of yield on your crypto assets. So let's go ahead and talk a little bit about how you can calculate these yields here and what kind of opportunities we have. As we can see, all the major pools here within the Waves Exchange are based around USDN. It's a stable coin tagged to the dollar. And we can see here that we've got other tokens, the native WX token for the Waves Exchange. You've got the Waves actual native coin, in this case for the protocol. We've got BTC, USDT, and ETH. So these are really some of the major assets that people like to trade. And being able to offer that through the Waves Exchange is great, and providing deep liquidity on that is awesome because it gives people a better trading experience. They experience less slippage, and that brings more volume likely to the platform. Now, there's two key APYs that I want to talk about here. You've got the base VAPY in this case, which is the yield that you're going to probably be generating on top of your liquidity positions in this case, right, as an LP. And this is generally going to vary over time because trading volume can change. But on top of that, one thing that the Waves Exchange is doing, and again, this is if you find that you like the platform, and I recommend diving into the token metrics here if you guys are interested, learning about the TAPY, which has to do with the token yield that you're going to get in the Waves token, right? WX, which is the native token of the protocol. So you can get extra tokens on top of that for providing a yield to the protocol. And you can bolster that even more by locking up the WX token. So there's a lot of key things to consider here when it comes to it, but I'm just gonna go ahead and give you guys the simple layout here. If you're interested in diving into it, you can basically buy the native cryptos you need to in order to provide liquidity through the buy crypto button up here. And then after that, after you've determined which kind of pool you wanna basically provide liquidity to, you would go through, click on deposit, and you'd have to enter in a certain amount of coins. So if I wanted to do So if I wanted to do 100 waves at the current market rate, I'm gonna have to provide $1,065 of USDN. So that's an important thing about providing liquidity. There's no single-sided liquidity. You have to provide both parts of the pair here. And again, if you guys are interested in being able to get more yield in this case, you can lock up a fixed amount of WXN tokens in order to increase yield. So that's something, again, that you guys can consider. I mainly wanted to focus on explaining how to provide liquidity. But again, it's something that you guys should first learn about in this case. Learn about the benefits of providing liquidity, the potential yield generating opportunities, but at the same time, understand the protocol that you're locking that liquidity in, and understand the potential downsides as well of providing liquidity, such as impermanent loss. There's all kinds of things like this that need to be considered, but I digress. I really recommend, if you guys are interested, to learn about liquidity provision, see if it's something for you. For me, I usually provide my liquidity into yield-bearing protocols like Celsius and other protocols like Compound, but liquidity provision can give you the opportunity to get even higher yields than those kind of protocols. So it's just something to consider, and I want to thank again Waves for sponsoring today's video. Now, the last thing that I want to go ahead and talk about here, guys, is Ethereum, and why I think Ethereum here is going to be one of the major signs we need to keep an eye out for when it comes to determining whether or not Bitcoin is really going to spring up. Right now, Ethereum is at a range, it's revisited a couple of times. It's on the lower bound range here, the previous range of resistance in the past, now serving as support. And each and every time here, back in July of 2021, here in October of 2021, every couple of months when we revisit this range, this is where prices started to pick up. And just like with Bitcoin, it's been setting on those higher highs and higher lows, turning previous resistance into support. This is exactly what we want to see when it comes to the confidence that we need to have in the market for prices to move higher. And I think it's important to watch what happens here. If Ethereum against BTC gets back up towards 0.09, right? If we get above this range here and set at a third higher low, I really could see Ethereum starting to charter much higher. This is again why I've been really on kind of the idea here that Ethereum is this beautiful middle ground bet. It's not as passive as just investing in Bitcoin, but at the same time, you're not trying to capture this, latent greatest new altcoin that could go to 0 or potentially 10, 20x, right? Whereas a lot of those are going to be failures in the end. Ethereum is the second largest crypto, and it's got the supply and demand economics here that is supporting price to do what it's doing right now. So again, keep an eye on Ethereum here. I think this is definitely one to watch, not only potentially as an alternative investment from just going into Bitcoin, but also for a key sign here that we really are setting up for that next blow off top in the market. So I digress, guys. I've rambled on enough here today. If you all liked this video, consider dropping a like, consider subscribing, and hitting that bell icon so you guys don't miss another upload here on the channel. And whether or not you agree or disagree, I would love to hear in the comments down below what you guys think about what we talked about in today's video. Always keen to hear more thoughts from you guys on the market and where you think things are heading. But until the next video, thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.